Guys, it's your boy Focus FX here at Focus FX Academy, and today I'll be taking you through how to do top-down analysis. And today I'll be doing a top-down analysis on Usdcad pair, starting from a weekly chart as a scale down to 1 hour chart, because I take my trades at 1 hour chart. That's where I look for confirmation for entries. Now, normally I do my, I do start analyzing at 4 hour chart. But today, for the purpose of this video, I'll start at a weekly chart as I scale down to hourly chart. Now, when you go to the market, you need to know what the market is printing. Is it printing higher highs and higher lows, or lower highs and lower lows? If it's printing higher highs and higher lows, it means that that trend is bullish because the market is breaking structure to the upside. But if it's printing lower highs and lower lows, it means that that market is bearish. The market is breaking structure to the downside. Now, what am I saying? An example of the market printing like lower lows and lower highs, market being bearish is in this case. As you can see, the market print here, did print here our lower high, then it printed our lower low, then our lower high, then our lower low, then it's continuing doing the same, printing lower highs and lower lows as it descends up until this level, where it now changes character, print a new higher low, then a new higher high, as it continue doing the same, printing new higher highs and new higher lows. As you can see, the market came, or rather the market came from printing lower highs and lower lows to printing higher highs and higher lows. Now the market in this case was bearish. The market in this case was bearish. Now the market in this case is what? Is bullish. So this is the structures that you'll be finding at the market, in the market. These are the structures that they're always going to be there in the market. Now it's upon you as a trader to set your eyes and identify these structures. You don't trade against the trend. You trade with the trend. If the market is printing higher highs and higher lows, then it means the market is bullish. Then it means that you should look for buy opportunities. If the market is bearish, the market is printing lower highs and lower lows, it means that you should also be looking for sell opportunities. Now, this is a weekly chart of United States dollar against Canadian dollar. And as you can see, the market came from a descending pattern to now it's ascending pattern. Now, this is how I do my analysis. The first thing, I look for directional buyers on a higher time frame. Then as I scale down to lower time frames. Now, the market changed character at this level. The market changed character at this level, symbolizing a change of trend direction. That's the whole purpose of a change of character. When you see a change of character, it means that the trend is about to change. If the prevailing trend was bearish, then the new trend that's about to come to the market is going to be a bullish trend. If the prevailing trend was bullish, then a change of characters occur, it means now the trend will shift from bullish to bearish. Now, after the price changed character here, it broke structure at this level. After breaking structure, now the market started ranging. As you can see, it's ranging. Now, I usually advise my students to avoid trading ranging markets, because the ranging markets, it's basically the market where liquidity is piling, liquidity from buyers and sellers is piling, because sellers are selling at the resistance, placing and they're placing the stop loss just above that resistance line. Whereas buyers are buying at the support and placing their stop loss just below the support line. Now, this is what we call liquidity. This is what we call liquidity. And if you know the concept of liquidity and manipulation, these patterns, smart money creates these patterns to lure or entice retail traders to the wrong side of the market so that they can take them out of the market, hit their stop loss, and use them or their stop loss as a liquidity after grabbing that those stop loss. Now they use that money as a liquidity to drive price to their unfulfilled orders. Now the market is ranging here. Liquidity is piling both at the resistance and at the support. Now the price changed character here. Change of character. Yes, changed character there. Then it broke structure at this level here. Now, when change of characters occur, it leaves behind a demand zone. If it's shifting from bullish, if it's shifting from bearish trend to a bullish trend, then change of character occurs, it leaves behind a demand zone. Now, where is our demand zone? Our demand zone or our bullish order block is somewhere around there. It's the last candle before that upward movement, somewhere around there. Sorry, I'll just have to draw this again. So change of character occurred and created an order block. So this is a weekly demand zone. It's our extreme weekly demand zone. This is where smart money have their orders. Smart money have their orders lying here. Now, the market is going to, currently the price is at this level. Now, the market is going to somehow break this support line, take this liquidity of buyers, then rebalance the market at this level because there's an imbalance here. I'm going to highlight it. There's an imbalance here. You see this huge gap where buyers are only in the market. Now the market needs to rebalance that void. Now the market, after clearing this liquidity, it will rebalance this zone here, then tap into the demand zone, then shoot up. It's the next supply zone, which is around here. So here is where you set your take profit, at this zone here, at this supply zone. So the market will be looking for buy opportunities as a weekly chart. Now the market is ranging in a weekly chart, and I've highlighted everything you need to know about the weekly chart at this pair. Now, as I scale down to a daily chart, as you can see, the market is in a clear, you can see it clear now that the market is ranging. You can see the market changed character here, broke structure, and now it's ranging. Buyers are buying at the support, sellers are selling at the resistance, and they both have their stop loss just below and above the resistance and the support respectively. Now, sooner or later the price is going to break out of this ranging market, clear the liquidity of of a bias, rebalance this market because there's a void here, there's an imbalance here in efficiency or fair value gap. There's an imbalance there. There's an imbalance there. Yeah. So daily chart looks almost the same like weekly chart. They bear a close resemblance. Now, I'll now scale down to 4-hour chart because here's where now things gets interesting. Now, as you can see, I do come up with my setups at 4-hour chart, then look for confirmation at 1-hour chart. Now, the market in 4-hour chart changed character here, then broke structure here. Change of character. Break of structure. Now, broke structure. So the market broke structure, created a new high, and failed to create a new high. Instead, it changed character here. The market created a new lower low. Now the market is going to change. Since the market has changed character, the market is going to change direction from from a bullish trend to a bearish trend because of failing to create new higher highs and higher lows. Instead, it created a new lower low. So market has changed character that area. So after creating a change of character, the market leaves behind an order block. Yep. Then an imbalance. An imbalance there. Now, my expectation is now that the market, after breaking structure, after changing character here, it's going to break this low, this higher low. It's going to break this higher low to the downside and create a new lower low because it will be breaking structure to the downside. So the market will break that higher low and create a new lower low. Remember, this is a 4-hour chart. Now the market breaks something like this, come and taps into this area. There's another block here. If we scale down to a 1-hour chart, you will see that there's a other block here. The market created an other block here, or rather a a supply here. So the market will do something like that. Then, yeah, goes like this and up to extreme demand zone, then goes down. Now, this is a 4-hour point of interest. Now, I scale down to an hourly chart. Yeah. So, when coming with entries, you can decide to place your entry at the week or at the 50% of your OB. Now, I had my my interest at the 4-hour order block. So that is where I'm going to put my sell limit order. Now, I'm just going to place my entry at the week. And my target area I'll be looking for to fill this imbalance on the left side of the market. This imbalance here. So I'll be looking for the price to fill that imbalance, and that's where my take profit will be. Now my stop loss will just be above this lower high, or I can just place it somewhere around here. Yeah. Now we are going to sell short term at the 1-hour chart and at the 4-hour chart. The long-term direction is going to be sorry, I have a sore throat. Okay, the long sorry. So another thing I forgot to highlight is that sorry. Pray for me. Anyway, I was saying I'll be looking for sell opportunities at a 4-hour time frame and at the 1-hour time frame. Short-term sell opportunities, but the long-term direction is bullish. At least that's what the daily chart and the weekly chart says. Daily, the market is in ranging, and I've explained what you see here, and also at the weekly chart, the market is ranging also. So, as you can see, I have two entries. The first, or rather, I have two trades. The first trade is a buy trade at the weekly chart and at the daily chart. And I've already gave you my bias. Is why I think the price will buy after hitting our weekly and the daily demand zone. Weekly and our daily extreme demand zone. But at the 4-hour chart and at the 1-hour chart, I'll be looking for short-term sales, because at the 4-hour chart and at the 1-hour chart, the price is in the range zone. The market is inside the range zone, or rather the market is ranging. So the buyers already, or rather the sellers already sold at the resistance here. Now the price is going to go down. So when it clears this imbalance and rebalances this market, the market will either break this support to the downside as it goes downside, or this support may hold and the price may continue rallying up and continuing with this ranging market. But if it fails, then the market the price will break when this support fails to hold. The price will be looking, or rather will be heading to our daily and our weekly demand zone. So basically, that's how I do my top-down analysis. And I've started at a weekly chart, then I scaled down to a daily chart, then to a 4-hour chart, and finally to a what? A 1-hour chart. So that's how I do my analysis. So or rather family, that's it for today. Until next time, take care and be safe. And before I forget, if you like this video, kindly like the video, comment, ask your question at the comment section, and I'll answer them in my future upcoming videos. Subscribe to my channel. Yeah. Until then, goodbye. Be safe.
Wait a minute! Who are you?